The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tuesday, 11th of March edition, and we're looking at the Technician's Hour. We're looking at the Dow making a lower low, down 311 at 41,600, showing very little signs technically of strength. Yes, there could be a pop because it's got this arch formation that took out the January 13th, 41,844 low. Once you go under that, usually there's a pop to the upside, and then you get the big test is going to go lower, or is that going to be a stronger bounce? We don't know just yet. And look, there's that M-shaped pattern that I was talking about in the weekly chart going all the way back to December, where I said there could be some kind of a pullback. But if it then rallies again, we could go from a lowercase h to an M-shaped pattern. And we've taken out the left side low, so now we can call that leg C to the downside in the weekly chart. And for the first time since I think that was going back to August. Going back to the October low where we actually saw a long position. We're looking at the 9-period moving average, which is being green all the way through in the weekly charts, even with the pullback back in April of last year. Yeah, all the way through 9-period moving average, even with that sharp pullback in going to the end of December, beginning of January, and then that rally to the 45,054 level, just 20 points off the all-time high. We're looking at, this is the first time that the 9-period moving average has turned negative, and I said we have to wait for the weekly chart. So far, all the weekly charts have been really strong. If it crosses negative, now we're going to have to, it's a weekly chart. I can't say anything until Friday at 4 o'clock. At this particular point, second day of the week, just the opening, not even an hour into the first session, the second session of the week, we're looking at the 9-period moving average. That could change by the end of the week. You flip back to green. But at this point, it's going negative. The week is yeah. The monthly chart has gone to a peak E, and we've gone past the rectangle support level. So I have to watch this very closely. So with that said, there are a couple of things that I need to make note of. We want to go to the S&P. Look, the S&P is a slightly different chart in the weekly. It didn't have that. It took out the left side low very, very quickly, the early January low. And now we're trading at 5603, it's just changed, 5604, down 10, 5564. Let me just double check if that really was the low of yesterday. 5564.02, yep, that's it. And we'll see if that's going to be taken out. This is exactly the area where there should be a little bit of a bounce, but the flat stochastic at 14% says you can only treat it as a bounce at this particular point. I want to go to the QQQ. I was asked about this a couple of days ago, and I forgot to get to it. 540.81 on the 19th of December was the QQQ high. The previous high was 539.15 with a 533 round number open on the 16th of December. We made that cup formation, beautiful peak D. Chapman, you get to the fourth highest peak. That's where other things can happen, peak D. And we've tumbled from the 540.81 area to where we are right now at 474. All the technicals are very negative. Stochastics at 12%. And look at the weekly chart. It's gone. Yeah, it's intra-week. I should put the down arrow. I should have put the down arrow in earlier, but I waited for the 9-period moving average to cross negative. I have to wait all week for that. But at this point, it's almost sure that it's in a sell signal, and it could be upgraded by the end of the week to a sell mode. Weekly chart has just turned down from a peak E. Now, this is going to be interesting. Some of you remember that there was a divergence between the composite, the NASDAQ, or not NADAQ, but NASDAQ. Come on, did you not notice that? There it is, S. Got that S in, there it is. The NASDAQ Composite Index, which made it 20,204.28 high in December at peak E, and now it's the third month, and it's making lower highs and much lower lows. And look, it didn't quite get to that 20,204 level and that rally into January. Was it February? Yep, February. And it went to 20,000. The high was 20,110. So it was 100 points off. And the technicals were already deteriorating terribly. So this is going to be very interesting. This is the largest. This is a NASDAQ composite with over 2,000 stocks, whereas the NDX 100, that's very much different. So the QQQ is the NDX 100. This is the composite index, and that's already very deeply into a sell signal, and I'm almost sure that this is the second week for the composite. So that down arrow that I put in the composite was a precursor, rather a prescient precursor to the QQQ weakness that we're looking at. Now, I need to get to something that I think will be very interesting, because the IWM, we are not in the IWM anymore. IWM had that triple top right there back from January to February. Then it's pulled back very sharply from the major high was 244, but the last high was in the 230s, and here we are at 200. And it looks very weak, and the 200-period moving average in the weekly of 197 looks like a target. Even the monthly chart, even without waiting for the month to finish, is at least at this point looking very much like it's in a sell signal, not an upgraded sell mode, but a sell signal. All right, I don't want to take too much time now. I'm just going to run through these. The gold is trading very nicely, up 26. It's about to test this inside track repellent zone. I didn't want to make it messy. I will make it messy because it's important that I show you what we're looking at. Green, and this one will be red or pink. Look at pink. And we're right in the inside track repellent zone. If it pushes higher, that'll say that the arch formation is not unfolding, that it's probably going to take out the high, the continuous contract high of the 5th of March of 2941.3, 29.4. Yeah, doesn't have much to go. It can still do that. Silver's catching up a little bit. So silver is, nice action, up 77 cents at 33.30. Interesting, very nice. Because it wasn't looking too great yesterday. It looked like it was arching over. So silver's playing catch-up. Let's go to high-grade copper, HG. High-grade copper, HG. Oh, also acting quite nicely, up 10 cents at 4.77. Now it is on. Yeah, look at that, making a second cup formation. Oh, that's very interesting. If I do a time sequence in the Chapman methodology, I'll do this quickly before the break comes. It says buy. I wonder if that's really going to work. That buy later this week, there should be a test of the left side high. Let me do this quickly right there. And that would be at 4.88 on the continuous contract, and we're at 4.77 right now. Dow's down 300. I'll be right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Question came in. Let me get there. Did I finish? No, I haven't quite finished the summation. So high-grade copper by the 17th could try for 488. That was the previous high in the continuous contract. Of course, buy, I should say. It shouldn't. It doesn't have to be then, but it could be buy. The 11th could do that. Let's go to the next question, which came in about Caterpillar while I've got it. Yeah, Caterpillar. Where did I type that? C-A-T. Yeah, it did have a nice bounce, but I think Caterpillar is in the area that is most vulnerable to the whole cyclical aspect with tariffs and all. It's going to take a little while for Caterpillar to get going until Caterpillar is trading the 368, 372 area. I think bounces are likely to fail and it'll keep testing. Deere has a different chart pattern. So Deere is more agriculture. It's still pulling back today. It's down 9 at 479. It hit a 515.05 all-time high on the 19th. That day it also had a 495 round number open. If this trades and closes, I think it's already done that. Yeah, I did that. Was that the close on the 7th? 499. Yeah, so it's closed above it. That says that that is now just minor resistance. Before it would have said it's pretty major resistance. Once it tags it, it says minor resistance. But look at this. Deere has a much better chart than Caterpillar because it is in the agricultural area, and that's really important. So this the next question came in. What was it? What about Robinhood? It's been cut in half. Yep, it sure has been cut in half. Robinhood trading at up $1.66 at 37.26. We've been long since the 16s. We took a little bit off all the way up to the day of the all-time high. That was at 66.91. For us, it was at about 62.63. And we're just now waiting And we're going to attempt a little trading longs along the way down. But this is going to be very important because we've got the 34.02 low of the 18th of December. Robinhood made that low and then had a fabulous rally all the way to 68.91. So it almost doubled, about, it's a pretty good percentage gain there, about 90% gain. So now what's really important about this is that on the pullback, if you look at the Eiffel Tower straight up move, I should really call it the pyramid pattern right here in the weekly chart, it makes this whole area of the 34s really important to hold. I'm not sure that it's going to hold at the same time how this bounce attempt right now. If this bounce doesn't take out the low of yesterday, which was at 35.23, but the high was 41.20, that's a long way to go. 4 points, more than 4 points from here where it is. But I'm anticipating that at least there's an attempt to make a little arch formation. If it can get some traction, it'll be telling us about some of the things like Bitcoin. Bitcoin had a bit of a rally this morning. It's given back some. It's up 1625 at 80,650. Made a lower low today of 76,735. It still doesn't look great, but it's in that whole category where the Robin Hooders are trading, and I think that really is adding to the profits of Robinhood. So we'll see. They're also in the small cap. So I just wanted to have a look at this. Let's go to Nova Gold, for instance. In the small caps of the Nova Gold resources, in the very small caps of the gold and silver area, look at this. This is NG. It had a big spike. It went from the about 280 level, 285 level, all the way to almost 360 3 days ago. Now it's trading at 331. If you look at CDE, which is core mining, that's the silver stock, trying to rally. It just can't get off the ground. So the issue here for me is, when do the small caps, actually I should even call them micro caps in a way. They're not really micro caps. They're the smallest number, the lowest priced gold and silver stocks. When do they really start to get a move on? Because when they do, that's going to be important, because at this point I see gold more as a geopolitical economic icon and symbol, rather than if you look at the GDX. Look, the GDX is doing okay, but it's really not participating at the same degree. So I'm just saying to you that in very specific stocks like an HMY have done fabulous. Even today, HMY is up 44 cents at 11.96, trying to go for the 12.49 previous high on the 10th of February. This is different. So there are a couple of stocks in the gold area. I wonder if FNV, I haven't looked at it for a while. FNV, I don't even have it. I've notated this hundreds of times and now lost it. Peak A, B, C, D in the monthly, peak A, B, C, D, E in the weekly. Looking at the daily, just the most recent rally is A, B, C. Yeah, so this is acting very well. 145.65 up 2.04. There are a couple of gold stocks that have really been stellar performers, and this is one of them. So now next question came in. Oh, could I look at the USO? I haven't looked at that for ages, and I probably lost my. No, I haven't. So the high that was made, not the all-time high, the most recent major high was in 2022, just over 90, comes tumbling down to below 60, and then it's kind of gone sideways, but it did make, in the sideways formation, it did make a peak D. I'm always looking at that D in this kind of rectangle formation that says, be careful, because at that D in the rectangle formation, if it takes out key support, I'll start off with 70, and it's a 71.75 right now. If it closes under 68, then you've got to look at the 66s as the next level of support. So it's really important for crude oil, the USO, United States Oil Fund LP, to be showing some kind of, and it's way below the 200-period moving average in the daily, and it's on the 200-period moving average in the weekly. This is just not telling me anything. It's just saying it's kind of stuck, and let's call it stuck for now. So United States Oil Fund. I want to go to natural gas. I had a question about UNG, so let's go to NG. NG is trading. It made a leg D, a very sharp spike to the 4.901 level yesterday. That's and it hit, that's right. That's what I wanted to tell you. It hit the 200 period moving average of 4.92. It missed it by 10 cents. It really had a spectacular move in the last 3 weeks. It's really gone from beginning of February all the way, actually 4 weeks. It's gone all the way from the 304 to this level. That's really good. So let's look at UNG. UNG's United States Natural Gas Fund, 138 round number high. Well, that might have changed because it's a continuous contract. But look at this. It's making this U-shaped pattern. It's really a ball formation. I'll be back. We'll talk about it. Whoa, the Dow's down 445, 451. S&P's down 42.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the Direxion. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, got some questions. Let's get to them. So, BMY, Bristol Myers Squibb, trading down $14 at 61.98. It's in leg C. So I've been showing this to subscribers for about a week now, that there is a divergence between some of the really biggies in the tech sector, not just the tech sector, but really the ones that had spectacular moves going into December, January, February. And they're taking a huge breather. They need to do that. Most importantly, you've got Bristol Myers doing very well. It's in this counter trend, almost defensive. Let's see what Lilly's doing. Eli Lilly. Lilly is down today, down 5 at 824. It made a peak F at 935.64 with a 910 open on the 3rd. So it's pulling back to the 200 period moving average. But you do have, let's see what General Mills is doing today. It's down $1.88, but it had a spectacular move. So I didn't want to, I focused on this for subscribers to say, look, there is a very big divergence in the market. There are the defensive areas like Coca-Cola, McDonald's have all done very nicely up until now. I didn't really want to go into them because they looked a little bit overbought. So we did. Today we had one long position, which had a fantastic move to the upside. It's given back a chunk of it now. So far, we're still looking quite good. And this is one that we actually own. But I wanted it as a real test of a bunch of things. And I didn't anticipate it would be so good. I would have said, take something off. I'm calling it only a trade. And we didn't do that, which is a pity because it was up about 2.5 points or something from where we got in. Now, let's just do this. Other questions have come in. So let me get to the questions here. So, hi, Basil. Good morning. Would you speak to the importance of the upcoming Fed meeting on March the 20th and the potential impact? What your thoughts are? Thank you, Basil. Now, if I'm not mistaken, the importance of March the 20th is very significant. Maybe not as significant to the Fed as it is to one of our tigers, and I think that's the birthday of Tommy O'Brien, March 20th. I know that because my son's birthday is a few days later. So with that said, let's look at this. This is really important as far as I'm concerned. The TLT has gone to, it rallied quite sharply until last week, and it went up to the 92.61 area. Then it pulled back. The 9-period moving average, remember, I use this all the time. The 9-period moving average is still way above the 14. That says there's room to retest the 91.78 level. It's 91.30 right now, 25 cents. If it can go higher, that's just going to say the Fed's work is being done for it, because then the TNX.X. See, now I can't speak to your macro question here because this is I always say markets, people say market hates uncertainty. I say, what are you talking about? Every single day there's uncertainty in the market. Market hates uncertainty about uncertainty. And that's where we are. We're at least once removed, more likely 3 times removed from uncertainty. So look, the TNX has been pulling back nicely. I'm not treating this as a market macro. Look, I'm treating it only as bonds, and I'm saying for the first time in 4 or 5 years, we've started to see that bonds on the pullback, bonds came down with the stock market, so their yields went higher. This is the first time we've seen the old macro look where yields came down, it helped stocks. And so far, yields have come down. They haven't helped stocks, but at least you've got bonds rallying as it used to be traditionally when the market was tanking. And that's exactly what's happening here. So let me just put it this way. The high that was made at 48.01 right there back in early January, mid-January, right here on the weekly chart. Let me just move that over. Why is it overlapping? Oh, because I moved this to show the composite index. Okay. This is really important. We've made a leg A. Here's your leg B. It's still a leg B, even though it's higher right now. If that 9-period moving average, which has just crossed negative, can stay negative all week, it says that yields will be coming down, bonds will rally. And that, as I said, could be doing the Fed's work for it. In other words, lowering rates. They don't even have to discuss. There's an economic slowdown. There's no question about it. And I've been traveling quite a bit over the last month, and if you're looking at planes that were pretty full, having a little bit more competition now. Look at this UAL. Look at that move to the 116 round number high on the 22nd of January, and it comes all the way down to the 200-period moving average of 75. That's a really big move down, right? It's about a third almost. If you're looking at, let's just go to Delta Airlines. Delta Airlines has a big, strong move to the 69 and 98 area, and now it's trading at 46. If you look at jets, I spoke about this before I went away to Sydney. I said, look at this spectacular move. Jets has gone to 27. This is the U.S. Global Jets ETF. Well, it was up in the 27 area. It's now at 21. That's a 6-point decline. That's, I would say that's the same as the airlines, at 28 to almost 30%. So that just says to me, you've got to be very careful here, because what was working up until this January into February period is just not working right now. So that says to me that there is a slowdown. It's going to show up for sure, besides all the cutting that's been done administratively in the government. So all I can say is that I've been looking at this, speaking about it for some time, saying I believe the reason why we short, remaining short the Dow and the S&P is because I've been saying that I anticipate that the usual March or October low, that's where you see pretty serious lows. There's a chance that could happen again. And I'm anticipating in March sometime we're going to get the VIX index, the volatility index. So I'm answering your question in a market sense. I'm not doing it in terms of a Fed sense. I'm saying this is doing the Fed's work for it. It is lowering rates. All they need to say is we're going to follow the data. And it looks like we should be lowering rates. That's probably something like that. So look, 29.56 yesterday was the high in the VIX index. Today's trading at 29.30 at the high of the day right now. What is it? So Trump said he's going to have steel and aluminum autos 25 to 50% tariffs. Oh, no, it was, on steel. And then another one in the comment in the Tiger YouTube says that Canada has some tariffs which are 200%. Once you get into tariff wars, we don't know where it's going to end. That's the thing. Dow's down 520.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So let's just go to this now. I had questions, and I'm just going to get to right now. So the first one was about the Fed. Dealt with that. VIX, I showed the VIX. Next question. Hi, can you review the semiconductor? So my contention has been the semiconductor is very weak, that NVIDIA should be pulling back very sharply at some point. And you can see the SMHs are only down 376 right now, down at 210.89. But look what's happened. Remember, I said if it takes out 230 support, 228 support, that's going to be a big problem. And lo and behold, we're now at 210. So that means that 220, 210. How can that be 220 if we're at 210? Did I do something wrong here? I certainly did. 200.49. Oh, that's 200.49. Ooh, all this time I've just had it sitting there. Didn't realize. 200.49. So this is a big deal. So the SOX index, that's 3 times short the SMHs. And I was waiting for a nice pop to get the SOXS for subscribers. Leg D gone above the 200 period moving average. Leg B in the weekly chart. Ooh, this is something. So it's just saying that we're getting very oversold on a short-term basis, but you got the whole thing with tariffs. It's an unknown, and this is really a big deal. So I would have said right here that we are very close to a pretty decent rally, counter-trend rally, but that's why we didn't do any long positions in the key indices. We remain short, but we did go long. As I say, one of our positions, we added to it as a trading position. And a fabulous move, gave back some, still holding the stop that we have. So I'm looking at it and I'm saying semis are still 200 will be my target, and that's going to be the big test. It's at 210 right now. It could have bounces in between, but that's kind of what I'm looking for. Maybe I'll just do NVIDIA for the moment. NVIDIA right now is down only $1 at 105.95. But look at the way it's making every day just about. It makes lower lows and slightly lower highs. So, and yes, this trend line that I said has to hold. So if it breaks 102, then all of a sudden you're looking at this low that was made on the week of the 6th of September of 100.95. That's how I go step by step. So that's that. Next question came in. Could I look at VKTX? VKTX sounds familiar to me, but VKTX is Viking Therapeutics Inc. I had this notated once. Peak A, peak B. If I use Yeah, let's just call this CD. So, yeah, so it ran up to 100, almost 100 back in July of 20. No, it was January. It was February of 2024. It ran to 99.41, and then now it's trading at 24. I have a trouble with this one. I've looked at it before. I don't know why I don't still have my notations on it, but all I can say is that 200-period moving average, which I think at the time I said that would be a target support level at 29. It changes slightly because it's a rising. Now it's flattening out. 200-period moving average in the weekly chart. This is in the biotech icon. So I did have a biotech that I looked at, XERS, which I almost put on for subscribers a couple of days ago, but it gapped up and I just wasn't sure what it would do. This is I don't know how to pronounce it. It's XERIS, Keris Biopharma Holdings, develops and commercializes advanced products and injectables. Leg D in the monthly chart. I'd done all the homework on it. I just didn't feel comfortable in this market. 4.98 was my target. And today's high is 4.68 leg E. This is different altogether to the one that you're discussing, Dan. So all I'm saying is that I've done work on a number of biotechs, and I don't know why I just don't dive in and say, okay, put a stop in, because they've really done very well, these micro biotech stocks in the single digits. But it's at this point, survival is the most important thing. I want my subscribers to have good cash positions. We've taken a lot of cash, we've built up a big cash position. I want that cash position for the next big buy that we get. I'd like to be in a position where we say we don't have enough money to buy all the stocks that we like. That's great, because it means that you've made some kind of a low and you can start adding to your positions as they move up. We're not even close to that right now. So that's all I can say there. But I need to go just back to it for a second, because there's one thing, VKTX. There was one thing that I wanted to mention, was that the gap down today, just the low that was made 5 sessions ago of 24.41, and today's low is 24.44. So all I can say is if it takes that out, it's going to make the 200-period moving average of 29 much harder to break above. And as biotech at any point, you could get news that spikes it up, but any spike having gone down this low says that it's got to go over 31.50 to really say that it's got more upside potential. You've got so much resistance between 28 and 30. I hope that helps you. Can we look? We did. Well, it's for the gap. Oh, between 13 and 14. Oh, that's what you're talking about on the downside. Yeah, as it stands right now, let me give you the weekly chart. Oh, sorry, I didn't read the full question. Yeah, I don't know if it is. I don't have a gap. Oh, there, that little gap right there. I would go for one step at a time, and the first step is 17.23. What's today's low? 24.44. Yeah, the whole area between 20 and 17. That's going to be very difficult. If it takes it out, that's a big problem. So the answer is yes. I don't see any buy signal yet. So I've answered your question. Whew, I didn't see the whole question. VZ, yikes. So here's another one that I said to subscribers. Look how Telephone, Verizon, and Comcast have held. But I can't trust the whole idea of cutting the cable, the competition. And all of a sudden, Verizon, which was tootling along in the 47s yesterday, were there any round numbers as a clue? 47.36, 46.06 was the open. No, and today is trading down almost 3 at 43.62. So that's the thing I've been afraid of with these things. Let's see if Telephone is actually pulling back. Yeah, just a little bit. Down 70 cents at 26.58. These have been spectacular. It's all part of the XLC. This is a communications ETF, but because that has Meta, Google, Netflix, Disney, Verizon, look how it's pulled back. It's and leg D in the weekly. That's why I'm a little cautious now, because now all of a sudden the weekly charts are starting to show some deterioration. that'll impact the monthly chart. So all I'm saying is that March is going to be a really critical month. There's another question here. Oh, VGZ. Oh, that's different to VZ. This is VGC. They sponsor one of our segments. This is Vista Gold trading up nicely, up 7 cents at 7.74. Much better action than yesterday. Wow. I'll be right back. Dow's down 5.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Just to check on some questions. Yeah. So I was asked about, someone said, so you were in Australia. What's the Australian market like? Well, I don't know. I used to get every single one of the markets years ago, but I don't now. I have this is the EWA, which is the Australia ETF, which isn't exactly the same as the market itself, but the ETF made a double top. I love this. Look at this. At 27.43 in June of 2021, 27.43, and it goes to what? It goes to 27.23. Unbelievable. In September of 2024, and now it's pulling back. Look at that beautiful it's a rectangle formation. They're going to an E, and now it's down sharply. Made a peak G just recently. Actually, while I was there, I think it was. No, the day before I left. So that's on the 13th of February. It hit 25.67, and now it's trading at 23.25. So it's 2 points lower. That's serious stuff. Now, I remember making a note of this and saying I'm going to keep it as a peak B, but if it takes out the left side low of right there, 22.95 back in August, weekly chart, if it takes that out, that's going to be a B minus, one of the few times that it ever failed at a B minus in a weekly chart. So all I can say is we're going to wrap it up in a few minutes, coming up to the end of the show. I'll be back with Jacob later on. Just be really careful here. I don't see anything yet to say that we're making some kind of a low right now. Look, even a lower low in the Dow is now down 519 at 41,388. And as I say, we still remain short the Dow and the S&P. Wow, that is quite a pullback. In 2 days, it's gone from 42,500s to 41,400s. Not good. I'll be back later on, and check out my Opening Call Daily Newsletter. See you